Hey, Dan Passarelli here. Happy short day and happy Independence Day to all our American family members. I hope you have a nice day eating hot dogs, drinking beer, all those things us Americans love to do. I was looking at the markets, which made a new all-time high today, which, it seems like once a week we're saying it made a new all-time high because it would be about pretty accurate for this entire year. And wondering about the chances of a pullback. Now, to me, one of the most important things is the PE ratio. That's the price of the stock or index to the earnings of the company or companies within the index. And so I wanted to get a good number to share with you. So I Googled it and came up with something kind of interesting here. So this is Y Charts, which is a pretty good service. This is the PE, this is a graph of the PE ratio, the forward PE ratio. So what that, and it's an estimate because what they do is they take the estimate of all the analyst estimates of the future earnings and they come up with the price of the index to the estimated future earnings. And you look at it and hey, it's down. It's down from last month and the month before and the month before and the month before and the month before and the month before. Down for like the past, last time we had a reading lower than this was September 30th of 2022. So on the surface, you look at that and you say, yeah, man, low PE ratio means the stocks have further to go. But this doesn't really tell the whole story. In fact, if you look at it and you think about it, it actually kind of tells the opposite story. And so this is why I think we might be due for a pullback. If you look at this PE ratio, this is the trailing 12 months PE ratio, which is the earnings price of the index to the earnings from the past 12 months. This tells a different story. And it might be nice if we kind of zoom in a little bit to 2002. We are definitely, if we get rid of this sort of post-pandemic market frenzy that we had, if we just kind of chop that off, we're definitely in the top half of the PE ratio since the year 2000. I find that to be on its own, interesting, gives some indication that maybe stocks are potentially overpriced. But let's face it, what we really care about is what earnings are in the future. Because if the price goes up some, but if earnings go up a lot more, then that lowers the PE ratio, right? So the future is really what matters. So that brings us back to this chart. Now, this is apparently based off analyst estimates. And from other sources, I've noted that analyst estimates have been pretty rosy. Now, that being said, as we're getting more data, especially the key data point that is going to come in on Friday, which is the monthly non-farm payrolls, because JOLTS yesterday came in with more job openings than expected. If we see fewer jobs, that could be a sign of the economy weakening. That's what a lot of the Fed governors are watching. Now, just before I got on this call, I had a thing pop up on my phone that said Jerome Powell said that they still need more evidence that inflation is heading towards 2% before they cut rates. So the Fed is apparently still taking that pretty stubborn, not necessarily in a bad way, stubborn stance, but they're worried about unemployment because if we still have inflation that's too high and we start getting employment that's too low and go towards recession, that's what's called stagflation, and that's the worst of both worlds. So this chart, which is based on estimates, that's very, very key phrase here, estimates, if those estimates change, that changes the shape of this graph, and that changes what the PE ratio ends up being, because the P is going to be where the P is, but if we change the estimates, if analysts change the estimates of future earnings, well, then that's just going to make the PE ratio much higher relatively, and that means the P, the price, must come down. So that's why I think we have a pretty good chance for a pullback coming soon. I personally have been buying a few puts, not overdoing it, just looking for opportunities when there's lower volatility, when the market makes new highs, to slowly buy in some puts about 3 to 4 week time horizon. So that's my story. I'm sticking to it. Again, hope you have a great rest of your day. This is Dan Passarelli. Trade smart. Have a nice holiday.